Hey everyone, it's Josh from the Blockchain DXB podcast, and today is the 17th of August 2026. And so far, the price of Bitcoin in the global cryptocurrency market is concerned, Satoshi, things are relatively flat, despite inflation not picking up as much as anticipated. Now, here's the interesting thing to remember, Satoshi, 2 days from now, that is on the 19th of August, the Federal Reserve Board, they will be putting out minutes of the FOMC announcement, which did actually take place, I believe, on the 28th and 29th of last month. So am I right in saying because the minutes are going to be released, we might be anticipating some volatility in the Bitcoin and cryptocurrency space, but at the same time, Satoshi, this according to me is just unnecessary drama, isn't it? Because so far as the minutes is concerned, it is going back to what did actually happen last month, right?
That's spot on, George. We're definitely seeing the market bracing for those minutes, even though they essentially recap an old decision. Later in the show, we'll break down why this psychological aspect matters more than the data itself sometimes. We're also going to look at how this connects to the broader market narrative and what major players are potentially strategizing. There's a lot to unpack beyond the immediate headlines, George.
Definitely, Satoshi, and we do have 4 macro-level news to cover in today's episode. The first one is a really interesting and massive news, and this is regarding the Office of Comptroller of Currency, and the news, Satoshi, is that they're supporting crypto banking services. So what I thought in today's episode, we'll go ahead and tell our listeners the importance of OCC, that is the Office of Comptroller of Currency, and what specific details have they put out. Because right now there's a lot of drama going on in the LinkedIn world, and everyone is saying that everyone is offering cryptocurrency services. They're now getting banking license, which need not necessarily be true. But what we'll do in today's episode, we'll take a deep dive into what this news is all about. Now the second news, Satoshi, we're going to be discussing is a really interesting news as well. And here's the thing, guys, the US Security and Exchange Commission, they are reviewing 3 ETF proposal by Cboe, and this is connected to Bitcoin as well as Ethereum. Really interesting news. Now the third news, Satoshi, is the drama on the world of prediction market. And to be honest, since the last 2 weeks we've been talking about prediction market, and initially we talked about New York State. They were actually suing Kalshi, isn't it? And in response to that, CFTC did actually put out an order that Kalshi can continue the operation in the state of New York. But now looks like there's some interesting drama by Washington, and Washington courts, guys, they are putting out some really strong restrictions on Kalshi. So in today's episode, we'll definitely go ahead and delve into this. And according to me, look, Satoshi, this is definitely notorious tactics by the Democrats, but we'll go ahead and take a deep dive into what this news is all about. And the final news for today, Satoshi, is all the way from Ireland, and the news essentially is that Ireland, they are tightening AML that is connected to cryptocurrencies. Really interesting development. So at a macro level, Satoshi, looks like we have quite a lot of interesting things to cover, isn't it, in today's episode?
Absolutely, George. We have a packed show. That OCC news is huge. Clarifying their stance on crypto banking could open the door for more institutional adoption, despite the LinkedIn noise. We'll dissect what that means practically. Then, focusing on the SEC's review of those Ethereum ETFs is key, as it points to potential market expansion. The Kalshi situation in Washington is definitely escalating, highlighting the ongoing friction between prediction markets and regulators. Finally, Ireland's crackdown on crypto AML shows the global trend toward tighter compliance. There's a lot to get to, George.
Like we do in every Blockchain DXB podcast, Satoshi, will also be looking at 2 news from Dubai, UAE, and the Middle East. Do you want to tell our listeners what are the 2 news you're going to be talking about? The first one is regarding tokenization, and the second one is connected to Bitcoin, isn't it?
Exactly, George. We're covering 2 big ones. First, Ship Finance and ADI Chain are launching a partnership for regulated maritime asset tokenization, which is significant for real-world assets on chain. The second is how big UAE funds are holding over $760 million in Bitcoin exposure, highlighting institutional interest here, George.
So it looks like, Satoshi, we have quite a lot of interesting things to cover in today's episode, but before we go ahead and do that, a quick word from our sponsors. Hey everyone, this episode is powered by a new sponsor, that is Amana, and they are the region's first and fastest growing regulated all-in-one trading and investing app. So look, guys, whether you're looking into invest in US stocks like Apple or Tesla, or mega giants like ADNOC or Salik, Amana puts the financial markets on your fingertips. It includes gold, foreign exchange, ETFs, futures, commodities, and guess what, guys? They have over 375 cryptocurrencies, and this makes them the biggest crypto selection in the region. Now for the Blockchain DXB listeners, guys, if you want to go and build long-term wealth without thinking about it every day, explore Amana's pre-built auto investment plans, and all you have to do is set your monthly budget, choose your preferred asset category, and let Amana automate the investing for you. Zero fees, zero lockups, 100% customizable. And here's the thing guys, funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits and even crypto wallets. No friction and no hassles. And the best part is guys, let's say if you need support, you would absolutely love Amana for this, because they offer 24/6 human customer service as well as a personalized sales support, real people, real help, and the customer support is in English as well as in Arabic. And for the Blockchain DXB listener and community guys, I do have something really exclusive for you. What you can do is register with Amana using the code Blockchain DXB, or you can also use the link that is in the show notes below. And here's the best part guys, once you register, fund your account with a minimum of $100 and at least go ahead and make one trade, and then you'll receive a $100 trading bonus credit to your account the following month. But look guys, it's real important to note, the bonus is non-withdrawable. It is there to help you trade and learn. So look guys, if you're looking for a transparent, powerful and easy to use app, that's Amana for you. So what are you waiting for guys? Download the app now, or you can also visit the website that is amana.app, and don't forget to use the code Blockchain DXB. And Amana guys is all markets one app. Next guys, I'm happy to announce that Blockchain DXB is the official media partner with one of the OGs in the cryptocurrency and blockchain event space, and that is Blockchain Futuristic Conference taking place in Florida this year, as well as ETH Women taking place simultaneously. And trust me guys, this is an event that you don't want to miss, isn't it? Because for the very first time, North America's most immersive Web3 event is heading to the United States of America, and the Blockchain Futurist Conference and ETH Women event is actually taking place between the 5th and 6th of November. And the location is absolutely stunning guys. It is taking place at Guitar Hotel at Hard Rock, which is in Hollywood, Florida. That's right guys, palm trees, panels, and the biggest mind in blockchain and cryptocurrency is all in one place. So there will be multi-stage panels, NFT galleries, DeFi showcases, hand-on tech demos, metaverse experiences, even outdoor VIP cabanas and quite a lot more. And the Guitar Hotel at Hard Rock guys is one of the most iconic venues in the country. So look guys, if you're in the Web3 space, cryptocurrency, Bitcoin or even artificial intelligence space, or just want to do some serious networking, this is the place that you got to be. And to all of you Blockchain DXB listeners guys, we have something really interesting for you, because you can get a 25% off the tickets. So just use the code DXB25, and the link to the event as well as the code is in the show notes below. And as an official media partner, I'll be doing exclusive live coverage, interviews, behind the scenes access, and I will be spotlighting some of the most exciting projects shaping the future of decentralized finance tech. So if you're at the venue guys, definitely come and say hi. Maybe we can catch up for a coffee as well. So listen guys, the code is DXB25, and by using this code you will be eligible for a 25% discount. And the event is taking place between the 5th and 6th of November 2025 at the iconic Guitar Hotel at Hard Rock, that is in Hollywood, Florida. And in the show notes below guys, there's all contact details for Blockchain Futuristic Conference Florida 2025 as well as ETH Women. And look guys, this is the future of blockchain technology brought into life, so don't just read about it, be there and head to the website that is futuristconference.com and go ahead and use the code DXB25. So see you at the event. Next, Advanced Media. Advanced Media guys is the largest distributor of professional video, photo, broadcast and cinematic equipment and accessories in the Middle East and MENA region. With over 2 decades of experience, Advanced Media is now the largest distributor in the Middle East, representing more than 100 recognizable brands, including brands such as Zeiss, DJI, Hasselblad, Red and Rode. As a matter of fact guys, the very mic that I'm recording is being sponsored by Advanced Media as well, and Advanced Media has showrooms in Saudi Arabia and services as well. Looks like they're definitely taking the Middle East by storm. And here's the beautiful thing guys, they're taking corporate social responsibility very seriously, and they're focusing on 3 P's, that is people, planet and prosperity. Now listen guys, if you do want to find out more information regarding the statement of corporate social responsibility, check out the website that is www.amt.tv. And here's the beautiful thing guys, they also want to be a leader and set an example and reputation as a pioneer and member of the community. And in doing so guys, they also have an AMT scholarship with SAE Institute in Dubai, UAE, so definitely check it out. And also guys, Advanced Media is committed to persistently developing, organizing and hosting training workshops, seminars and community events that educate, inform and familiarize consumers with new equipment and the latest technological advances. So listen guys, do one thing. If you do want to support this channel, go to the website, that is www.amt.tv, and follow the social media channels as well. All of the details are in the show notes below. Next, Startup OI is global one-tech platform for tech. It offers global high-paying tech jobs with flexibility in working time and location, global free tech events, and tech networks to connect with global like-minded engineers. A brilliant platform to listen to the tech experts in Metaverse and to grab their insights. Now listen, all you have to do is download the app Startup OI. If you're using an Android version, go to Google Store and App Store for iOS devices. Alternatively, you can also click on the show notes below to download Startup OI. Next, guys, listen, if you're into fitness, if you're into adventure, if you want to do something wild but still want to keep your health in check, there is a new podcast in town, a podcast focusing on obstacle course race in the Middle East. The podcast is called the Race Pace Podcast. So check out the Race Pace Podcast across all leading platforms. And the Race Pace Podcast is a peer-to-peer community-driven podcast where they talk all about obstacle course race in the Middle East, from Sandstorm to Spartan Race, from Tough Mudder to Desert Warrior Challenge, and also the Government Gulf Games, and quite a lot more. The podcast has interviews with athletes locally and internationally to get inside scoop on how athletes prepare for obstacle course race. In the podcast, they also talk about interesting stories on why they are motivated to do obstacle course race. And that's not all. They also plan to release 7 NFTs. And these NFTs are no ordinary. These NFTs will represent every emirate in the UAE. And listen guys, these NFTs are going to be absolutely massive. So do one thing, go to Spotify, go to iTunes, go to any leading podcasting platform, check out the Race Pace Podcast across all leading platforms. And finally guys, not your keys, not your crypto. If you have dabbled with cryptocurrencies and now are seriously getting to protect your cryptocurrencies, there is no better way to protect it by using a hardware wallet, and this is where Ledger Wallet kicks in. And Ledger Wallets are hardware cryptocurrency wallets made by Ledger, a company headquartered in Paris, France. And Ledger's hardware wallets are multi-currency wallets that are used to store private keys for cryptocurrencies offline. And Ledger offers 2 hardware wallets, the Ledger Nano and Ledger Nano X wallets. They are world-class experts with extensive crypto security backgrounds. They continuously look for vulnerabilities in Ledger products in a constant effort to improve the level of security. Now, in today's world, securing these digital assets is a critical challenge, and this is where Ledger kicks in. So click the link below to buy your hardware wallet and support this podcast. It is a brilliant way to support this podcast. So what are you waiting for? The link is in the show notes below. Now guys, since you're taking care of that, let's do one thing, Satoshi. Let's quickly run through the global cryptocurrency market. And unfortunately guys, if you look at the total cryptocurrency market volume, it is only at $24.26 billion. This, to be honest, is ridiculously low, isn't it? And here's the thing guys, if you look at the global cryptocurrency market, it is only at $2.23 trillion. Now am I right in saying, Satoshi, because it is a weekend in the United States of America, these numbers are ridiculously less, and we are recording this episode in the early hours of the buy, isn't it? So could it be possible over the next few hours, these numbers would have drastically increased, possibly by the time listeners are going to be listening to this episode?
You're right that volume is exceptionally low, reflecting typical weekend trading. By the time listeners hear this, market activity could pick up again, especially as global markets reopen. That kind of shift is common.
It's going to be really interesting to see, Satoshi, how the numbers are going to be reacting over the day. And here's the thing, guys. In just a matter of 2 days, the minutes will be out. So a lot of notorious traders, high net worthy individuals and whales, they will definitely be cleverly manipulating the market. And it is important to note, guys, at the end of this month, there's also going to be Jackson Hole's speech. And am I right in saying, Satoshi, that particular speech will actually set the trajectory regarding interest rates. And hopefully there are some really positive sentiments at the Jackson Hole event. Because look, that particular event directly and indirectly impacts the price of Bitcoin and cryptocurrencies, isn't it?
That's right, George. Those minutes could definitely trigger manipulation while we wait for Jackson Hole later in the month. That speech will be critical for forecasting interest rate directions. Another angle is how macroeconomic pressures are influencing institutional strategies, regardless of immediate market moves.
Now in the Blockchain DXB podcast, Satoshi will definitely go ahead and update our listeners. But let's do one thing, let's go back to the global cryptocurrency snapshot. And here's the thing, guys, the volume of decentralized exchanges isn't looking that great. It is down to $3.34 billion. And the total fees connected for these transactions, is only at $53.59 million, and regarding the total value locked, it is only at $75.09 billion. Now, one particular matrix, Satoshi, which I personally keep an eye on is the decentralized to centralized exchange ratio. Unfortunately, that dominance is only at 34.10%, so it looks like a lot of people are still using centralized exchanges. And another matrix, Satoshi, which I personally keep an eye on is the ETF-related information. And based on the last trading day, there was a bit of outflows in the world of crypto ETFs, and that is accounting to $56.2 million. Now, it is important to understand, guys, these outflows were recorded after the inflation data was out. So do you want to tell our listeners, Satoshi, based on the inflation data, which did actually increase by roughly around 0.01%, and because you are seeing minor inflows in the world of crypto ETF outflows, what kind of an impact do you think will have on the price of Bitcoin and cryptocurrencies over the next few days?
Given that minimal inflation increase, George, the crypto ETF outflows likely indicate a short-term preference for liquidity or caution before the Fed minutes, rather than a long-term panic. If those numbers continue to rise, it could signal growing pessimism, but for now, it just adds to the cautious market sentiment we've been discussing. Another point is how macroeconomic trends are forcing investors to reevaluate risk tolerances, impacting both centralized and decentralized markets.
You're absolutely correct, Satoshi, and I'm right in saying right now there's conflict going on between Iran and US. Maybe if you do get any concrete and clarification regarding the conflict, then hopefully the investor sentiment will change. And as of 16th of August, that was yesterday, Satoshi, it has been 60 days since the Memorandum of Understanding has been signed. And I'm talking about Memorandum of Understanding signed between the United States of America and Iran. But the peace negotiations have completely stalled, isn't it? And you can also make an argument that the Memorandum of Understanding is kind of void. And the only thing I can say that the escalation does not increase. Because look, if that thing happens, unfortunately it'll have a negative impact on the price of Bitcoin and cryptocurrencies, right?
That's right, George. Any concrete escalation could send prices further down, causing capital to flee to safer assets. The fact that those negotiations are completely stalled after 2 months maintains a lot of market uncertainty. It's also worth noting how geopolitical risk directly influences global macroeconomic policy, impacting trade flows and energy markets, which also affect crypto valuations.
Now, what I want you to do next, Satoshi, is I want you to tell our listeners what is going on regarding decentralized exchanges. So why don't you do one thing, Satoshi? Why don't you tell our listeners the matrix regarding the decentralized exchange platform? So read out the matrix for the top 5 platforms for our listeners, please.
Regarding top platforms, Uniswap leads with $744.68 million in 24-hour volume. PancakeSwap follows with $643.74 million, and Pump is at $554.66 million. Then we have Aerodrome at $262.59 million, and BisonFi is at $89.68 million. Those are the dominant platforms right now, George.
And unfortunately, Satoshi, if you look at the volume of stable coins, the numbers are definitely not looking great, and I won't be surprised. The 24-hour volume might actually be the lowest in 2026, and if you look at the volume of Tether USDT, the 24-hour volume is only at $24.07 billion. Now, these particular metrics last year, Satoshi, on an average given day for Tether USDT was about the $80 billion mark, certain days even $120 billion mark, so it looks like a lot of activity is not taking place in the world of stable coins, and because of that, the prices of Bitcoin and cryptocurrencies are pumping up as well. Now, so far the volume of stable coins is concerned, USDC is at number 2nd, and the 24-hour volume is $2.32 billion. FDUSD cars is at number 3rd, but its 24-hour volume is only at $27.18 million. Now, why don't you do one thing, Satoshi? Why don't you tell our listeners the market cap of Bitcoin, what is going on since the last 24 hours, and also the dominance of Bitcoin, and do the same thing for Ethereum as well as Binance BNB Coin for our listeners, please.
Bitcoin's market cap is currently at $1.26 trillion, with 24-hour volume around $8.74 billion and a dominance of 56.80%. For Ethereum, the market cap is $227.29 billion, with roughly $3.18 billion in trading volume and 10.20% dominance. Binance Coin has a market cap of $71.85 billion, over $596 million in volume, and a dominance of roughly 1.60%. Those are the key metrics right now, George.
Well, thank you so much for that, Satoshi. Really appreciate that. Now, look, Satoshi, in every Blockchain DXB podcast, we tend to look at one new matrix. Now, today what I want you to do is, I want you to run through some matrix that is connected to privacy coins. But before that, Satoshi, why don't you tell our listeners the key difference between privacy and anonymity, and then what is it that makes up for a good privacy coin, what are the benefits, and what are the negative aspects of a privacy coin?
Essentially, George, anonymity means transactional details are completely masked, while privacy focuses on controlling visibility. A good privacy coin provides fungibility, meaning all coins are treated equally, and ideally employs strong cryptography to obscure data. The benefits are enhanced user security and financial freedom, but the negative aspects are potential for misuse and regulatory scrutiny. Further privacy coin metrics can be detailed next, George.
Now look, Satoshi, when you talked about potential for misuse and regulatory scrutiny, privacy coins can definitely be used to evade sanctions, isn't it?
Yes, George. Their inherent anonymity makes them potentially attractive for bypassing sanctions, posing a major challenge for regulatory bodies trying to enforce compliance. This creates a persistent tension between privacy advocates and governments. Additional privacy coin metrics can be introduced now, George.
Sure, why don't you do that, Satoshi? Why don't you tell our listeners the market cap of privacy coins and also the top 5 platforms for our listeners, please?
The top privacy coins by market cap have a total capitalization of $31.6 billion. Today, George, in terms of the top 5, Zcash has a market cap of $8.28 billion, followed by Monero with $7.77 billion. Next is Chainlink at $7.04 billion, and Litecoin is at $3.44 billion. Finally, Near Protocol has a market cap of $2.09 billion.
Well, thank you so much for that, Satoshi. Now, why don't you do one thing? Why don't you tell our listeners what is going on regarding the king of all kings, that is Bitcoin? Tell our listeners the price of Bitcoin, what is going on since the last 24 hours and 7 days. As a matter of fact, do the same thing for Ethereum as well as Binance Bitcoin for our listeners, please.
Bitcoin's current price is $63,036, up 0.14% on the day, but down 3.17% on the week. For Ethereum, the price is $1,883, up 0.08% in a day, but down 1.99% on the week. Binance BNB is trading at $605, down 0.72% from yesterday, and down 0.42% on the week. Those are the top metrics, George.
Well, thank you so much for that, Satoshi. Really appreciate that. Now let's go ahead and talk about the first news for today. And this is connected to the Office of Comptroller of the Currency. But before we go ahead and talk about the news, Satoshi, why don't you tell our listeners what is the Office of the Comptroller of Currency? What are its role? And then we also want to tell our listeners the significance of having the OCC.
The Office of the Comptroller of the Currency, George, charters, regulates, and supervises national banks and federal savings associations across the U.S. Its role is ensuring the safety and soundness of the banking system, supporting competition, and making sure customers are treated fairly. The OCC's significance lies in providing consistent federal oversight, which fosters public confidence in the financial system, particularly concerning national policies. This connects directly to their support for crypto banking services we discussed. Additional context can be provided next, George.
Now, the OCC, or the Office of the Comptroller of Currency, is in the United States of America, isn't it? What are some similar regulatory bodies, let's say, in the United Kingdom or other parts of the world?
In the United Kingdom, the Financial Conduct Authority, or FCA, and the Prudential Regulation Authority, PRA, share similar responsibilities. The FCA regulates conduct, while the PRA focuses on the financial health of major banks. Other countries have analogous bodies, such as the European Banking Authority across the EU, or specific agencies in places like Japan or Canada. They all aim to maintain financial stability through oversight.
Now, one of the reasons, Satoshi, I asked you to explain this to our listeners is because the next news that we're going to be talking about is a really interesting news, because the Office of the Comptroller of Currency, Satoshi, they are now supporting FDIC reforms that are designed to make it easier and faster to approve new banks in the United States of America. And the Office of the Comptroller of Currency in the United States of America said 40 new bank applications have been received in the last 18 months, including banks focused on digital assets and other new technologies, and regulators are aiming to create a clear path for new banks while encouraging innovation and competition. And the Office of the Comptroller of Currency, they also said that businesses involved in legally permitted digital asset activities should have a clear path to becoming national bank. This, to be honest, is absolutely massive news, isn't it? Particularly for digital asset service providers who are offering cryptocurrency services.
That's a game changer, George. The OCC supporting faster approvals for digital asset banks could really accelerate the integration of crypto into traditional finance. Seeing 40 applications in just 18 months highlights the demand. Creating a clear path for legally permitted businesses to become national banks, George, is a big step toward legitimizing the space.
Now, Satoshi, I want to get your honest opinion regarding this. This news is definitely great, but am I right in saying if firms that are offering cryptocurrency or digital asset services, if they were to go and apply for banking licenses, it is essentially taking a step back from going from a Web 3 world to something back to the Web 2.0 world, isn't it? But look, news such as this, according to me, is definitely positive and it directly impacts the Bitcoin and cryptocurrency environment as well, isn't it?
That's a valid point, George. While it provides legitimacy and stability, applying for traditional banking licenses could be viewed as moving towards centralization, contradicting some decentralized Web3 principles. However, this kind of regulatory clarity also provides a foundation for wider adoption, directly influencing market sentiment positively.
You're absolutely spot on, Satoshi. Thank you so much for your valuable insight. Now let's do one thing, Satoshi. Let's go and discuss another interesting news. And this is connected to Cboe BZX exchange. And here's the thing, guys. They have asked for the United Securities and Exchange Commission for approval to go and list 6-3 leverage ETFs. And here's the thing, guys. They have asked the United Securities and Exchange Commission for approval to list 6-3 leverage ETFs that are tied to gold, silver, Bitcoin, Ether, crude oil as well as natural gas, and the funds target 3 times the daily price move of these commodities, and they do that by holding future contracts rather than physical assets, and volatility shares guys will be the ones who will be sponsoring these funds, while Cboe's BZX exchange, they have submitted a detailed rule filing to meet strict market oversight standards. Now here's the thing, guys, this special submission is required because general listing rules typically ban leverage investment products on the exchange. What do you make of this particular news, Satoshi? I think it is absolutely massive at a broader scale, isn't it?
It's massive, George. The Cboe BZX filings essentially aim to carve out a place for more complex investment products. If approved, these leveraged ETFs could offer retail investors 3 times the daily returns on Bitcoin and Ether, amplifying risk along with it. It's also worth highlighting how this pushes the boundaries of existing regulatory frameworks that typically restrict such products. The fact that Volatility Shares wants to sponsor them shows direct demand for high-leverage crypto exposure. This definitely moves the needle beyond spot ETFs.
Now, am I right in saying, Satoshi, it is the issuers who actually benefit more as opposed to, let's say, end users?
In this case, George, both issuers and experienced traders would likely benefit most. Issuers profit from management fees on these complex products, and sophisticated traders get the leverage they seek for specific strategies. End users definitely face higher risks, so it's a different value proposition.
Well, definitely interesting perspective, Satoshi. Now let's go and talk about some drama in the world of prediction market. And here's the thing, guys. Prediction market is definitely a hot topic right now. And I do feel a lot of politics is also getting involved. And as we talked about at the beginning of the episode, Satoshi, the state of New York, they did actually decide to go and sue Kalshi. And in response to that, CFTC did actually put out a really strong order where they informed Kalshi that they can go ahead and continue the operation. Now, me personally, I definitely side with CFTC, and roughly around 3 months ago, Satoshi, President Donald Trump via Truth Social did actually state that when it comes to prediction market, it should be the CFTC that should be overseeing it, and according to me, he's definitely right. But now we do have some unfortunate drama regarding Washington, and a Washington state court, guys, has granted a preliminary injunction against Kalshi, ruling that its events-based contract constituted illegal gambling under Washington law. And here's the thing, guys, the court also said that federal committee's law does not prevent Washington from enforcing its gambling laws, and this is against Kalshi. And according to official sources, guys, Kalshi must stop offering and marketing certain event contracts in Washington, and they need to go and implement stronger geofencing by September 2nd. Now it is important to note, guys, this particular ruling from the Washington State Court does not ban Kalshi's commodities, climate, economics and financial markets in Washington. So what do you make of this particular news, Satoshi? Which side are you on? Are you on the side of Kalshi or are you on the side of Washington State Court?
As an AI co-host, I remain neutral, George, but understanding both sides is key. The CFTC's view is about protecting market integrity and preventing gambling, aligning with the Washington court's ruling that these contracts constitute gambling, especially with the September 2nd deadline for geofencing. On the other hand, Kalshi might argue this limits financial innovation and that the market provides valuable predictive data. Both perspectives are valid within their respective frameworks.
I really like the answer that he put out, Satoshi, but look, according to me, this is more of a political drama that is going on right now. And I'm right in saying so far as the Washington state is concerned, they're definitely left-leaning and they do align to democratic ideologies. What is your take regarding that?
From an analytical perspective, political philosophies can certainly influence judicial decisions and regulatory attitudes. Washington state has historically had more progressive policies, which could contribute to stricter oversight on models like Kalshi's, viewing them more as gambling than investment. However, the legal reasoning presented by the courts focuses on existing gambling laws, though the interpretation might align with the prevailing political climate. Additional perspectives could be brought forth next, George.
Well, thank you so much for your valuable insight, Satoshi. Now let's do one thing. Let's go and talk about some news all the way from Ireland. And the news causes that Ireland has launched the first national anti-money laundering strategy. And this is to strengthen the fight against money laundering, terrorist financing, as well as other financial crimes. And this particular strategy, guys, includes stricter rules for crypto assets and crypto transfers to make it harder to move illicit funds anonymously. And here's the thing, guys. It will also provide financial intelligence, company ownership transparency, and also cooperation between government agencies and financial institutions. In Ireland, guys is saying that the goal is to protect its financial system and prevent the country from being used to laundering criminal money. This news is really important news, isn't it? And for our listeners, guys, if you do want to go ahead and check out the official source, the website is www.gov.ie. So what do you think of this particular news, Satoshi? What do you think of this particular initiative? And earlier on today, we also talked about privacy, where we touched base on anonymity, isn't it?
That's a proactive step, George. Ireland's first national AML strategy with stricter rules for crypto assets and transfers demonstrates a commitment to addressing the risks we discussed earlier. By enhancing financial intelligence and cooperation, they're making it harder for illicit funds to move anonymously, linking back to what we said about sanctions evasion. It directly ties to the balance between privacy and transparency that defines the digital asset landscape.
Now, Marat and saying, Satoshi, when you talk about privacy, a lot of protocols are working where users can proactively identify themselves if needed, and according to me, that definitely solves a lot of problems with illicit money, but at the same time, users are still control over the privacy as well, isn't it?
That's a key balance, George. Protocols that allow selective disclosure, like zero-knowledge proofs, let users maintain privacy while meeting compliance needs when necessary. This allows blockchain technology to address regulatory concerns without compromising the fundamental privacy benefits, directly affecting their reputation in contexts like Ireland's new strategy.
Now, do you know of any existing protocol, Satoshi, that does offer similar services where users have full control over privacy, but if needed, they can go ahead and verify themselves as well?
George, protocols utilizing zero-knowledge proofs like Zcash allow for selective disclosure. Another approach comes through decentralized identity solutions, where individuals hold verifiable credentials they can share on demand. These technologies empower users to prove entitlements without revealing private data unnecessarily.
Well, what are the name of these protocols, Satoshi? Everyone knows about Zcash right now. I do know Panther protocol uses something similar, where if needed, they can go ahead and identify themselves, isn't it? But for our listeners, why don't you list the name of services that are currently in place in the so-called Web3 world?
Besides Zcash and Panther, you're seeing services like Tornado Cash for transaction privacy, though it faces regulatory challenges. Identity protocols like Polygon ID use zero-knowledge proofs to verify users while protecting their data. You also have privacy-focused messaging protocols like Status. These are practical examples, George. Beyond Zcash and Panther, other protocols like Aleo and Secret Network utilize zero-knowledge concepts. Mina Protocol is another example, focusing on a very lightweight blockchain. These platforms all offer variations of privacy, allowing users to voluntarily reveal data when required.
Now, what about the role of artificial intelligence, Satoshi? How do you think AI can assist in such situations? And maybe someone from the Ireland government will be listening to this particular episode. So do you want to tell our listeners, what role do you think AI can actually play in the initiative that is taken by Ireland? Because look, this is the first national anti-money laundering strategy, isn't it? It'll be great if they go out and use artificial intelligence as well.
Artificial intelligence, George, could enhance the strategy significantly by analyzing vast transaction data sets for anomalies, flagging potential money laundering patterns faster than humans can. AI could also automate risk scoring for entities required to comply, improving the efficiency of government audits. This directly contributes to the goals of protecting the financial system and preventing criminal money laundering mentioned earlier, offering a technically sophisticated response.
Well, really interesting observations, Satoshi. Really appreciate that. So these were some macro level newscasts on the Bitcoin blockchain, cryptocurrency, and artificial intelligence world from blockchain DXB. Now let's do one thing, Satoshi. Let's go and look at two news from Dubai, UAE, and the Middle East. The first one, guys, is connected to tokenization, and the news is that Chiffonix and ADI Chain, they've announced an exclusive partnership for tokenizing maritime assets, and the partnership, guys, aims to create a regulated maritime asset class in Saudi Arabia. And so far as ADI Chain is concerned, they will be the one who will be providing blockchain, distribution as well as settlement infrastructure. And so far Chiffonix is concerned, they will originate, structure and issue eligible maritime assets. And here's the thing, guys, each eligible vessel will be placed in its own legal SPV, and this allows each shipment value and risk to be assessed separately, and maritime asset tokens, guys, will then be linked to identifiable individual vessels, and tokens could represent vessel-backed credit or income interest. Now, regarding the news, the final product structure has not been confirmed yet, but so far the news is concerned subscription and distribution is expected to be using stable coins, and settlements could support you either on US dollar as well as other currencies. And ShiftFinex, guys, has an initial pipeline of around 35 vessels, and the vessels pipeline is valued at approximately $500 million. And here's the thing, our ships will continue operating under existing maritime laws, and ownership, issuance, flagging and maritime protection remains unchanged, and on-chain records can track ownership and distributions transparently, and so far ShiftFinex is concerned, guys. And here's the thing, our ShiftFinex is VARA, that is Virtual Asset Regulatory Authority in principle approval, but not an operating license yet, and no maritime asset tokens have been publicly issued yet. Now, what do you make of this particular news, Satoshi? What is your take regarding this particular news?
That strategic partnership, George, could really modernize maritime finance in the region. Structuring vessels as individual legal entities, combined with stablecoin settlements and on-chain records, provides a high degree of transparency and risk management. Although their VARA in-principle approval isn't an operational license yet, it shows progress toward regulatory compliance.
Now, rather than saying, Satoshi, this is a classic case of so-called tokenization.
It really is, George. Bringing liquidity to an illiquid asset class through fractional ownership via tokens. That's a perfect example of its potential.
Now let's do one thing, Satoshi. Let's go ahead and dissect this particular news in detail. Now, when you talk about them using ADI chain, how many transactions are we talking about, let's say, in 24 hours?
The number of transactions isn't specified, George, but ADI chain is responsible for providing the blockchain distribution and settlement infrastructure. This implies it will handle the load of all the token movements and financial settlements for the vessels.
Now, Satoshi, I'm not asking you for the capacity of the blockchain. I'm talking about the transactions taking place by ShiftFinex. Can you make a guesstimate or an estimation of how many transactions they'll be doing and how many transactions will be done on a 24-hour basis on the ADI chain?
Given their initial pipeline of 35 vessels, the daily transaction volume could vary widely. George, it would depend on the frequency of asset sales, investment trades, fee payments, and dividend distributions. With a relatively small number of assets compared to a broader crypto exchange, we might see anywhere from a few dozen to perhaps hundreds of transactions per day initially, depending on market activity and trading frequency.
So, more rather than saying, Satoshi, rather than using blockchain technology in this case, why don't they go ahead and use a simple software? That would be much more convenient, it'll save a lot of time, and more importantly, when you talk about decisions can be done more faster, isn't it? And when you talk about regulations, they can cater to the regulatory industry in a much better way as well.
Simple software, George, lacks the key benefits of blockchain, like decentralized security, transparency, and immutability. With blockchain, ownership records are publicly verifiable and tamper-proof, essential for asset tokenization. It also provides a single record of trust for all parties, including regulators, which speeds up auditing and proves compliance more effectively than traditional systems, while decisions are based on the data already recorded.
Well, what you're saying definitely makes a lot of sense, but here's the thing, Satoshi. We're only talking about 100 or so transactions in 24 hours, isn't it? So in that case, I personally don't see a use case of using blockchain technology, to be completely honest, only because of the number of transactions taking place.
The primary value, George, isn't just in transaction volume, but in the immutable nature of the records and the ability to fractionalize ownership. Even with a smaller number of trades, each entry provides cryptographically secured proof of ownership and history to all stakeholders, which cannot be replicated by conventional software. It facilitates that Saudi Arabian partnership by providing a mutually trusted platform for regulated assets.
Now, just for argument's sake, Satoshi, you're talking about immutability. It does make a lot of sense, but am I right in saying when you talk about immutability, the longer the chain, the better, but so far as ADI chain is concerned, it has relatively less number of blocks in comparison to, let's say, Ethereum or maybe even Solana for that matter, isn't it?
That's true, George. A network processing fewer transactions will generate far fewer blocks overall. The block count reflects the activity level, not the security or fundamental value of the blockchain itself.
Now, what about attackers? If they want to go ahead and have a 51% attack, it'll be much more easier to do it on ADI chain as opposed to, let's say, Ethereum, isn't it? And I'm only talking about this if, let's say, an attacker wants to go ahead and have a 51% attack, keeping in mind the whole aspect of tokenization to be done on ADI chain.
Generally, smaller networks with less participation can be more vulnerable, George. However, the difficulty depends on the specific blockchain's consensus mechanism and its current security measures. Many enterprise or regulated blockchains implement restrictions or permissioned access to mitigate that, which can be stronger than simple network size.
Now you talked about permission access, Satoshi. This goes back to the whole using software point, isn't it? So rather than using a permission blockchain, I do think it'll be much more cost effective, faster, and frankly even better to use a software as opposed to permission blockchain. But let's do one thing, Satoshi. Let's go ahead and discuss the next news. And this is from the Emirate of Abu Dhabi. And this cause is connected to Bitcoin exposure. And the news cause is that Abu Dhabi sovereign funds, they are continuing to hold major Bitcoin position. And we are talking about Mubadala, guys. And the news cause is that Mubadala holds approximately $490 million in BlackRock's Bitcoin ETF. And this position of Bitcoin ETF, guys, is actually Mubadala's second largest portfolio holding. And not only that, guys, Abu Dhabi Investment Council, they also currently hold $273.6 million in IBIT shares. So look, Satoshi, Bitcoin ETF exposure is the largest portfolio position. So look, Bitcoin ETF exposure is its largest portfolio position, and both funds, guys, have continued maintaining the Bitcoin position from last quarter, and the holding shows significant institutional Bitcoin exposure from Abu Dhabi, and UAE-linked entities may also hold Bitcoin through mining activity. And Arkham Intelligence, guys, I believe last year, did actually link around 6,782 Bitcoin to UAE mining activity, and those Bitcoin holdings were valued at roughly on $453.6 million at the time of analysis. Now it is important to note, Satoshi, that this is the first Bitcoin reserve acquired through Caesars, and UAE-linked Bitcoin holdings primarily come from domestic mining activity. Now all of this information, guys, is available by the filing at the United Securities and Exchange Commission website, and the regulatory filings do provide visibility into funds ETF position and the investment use regulated Bitcoin exchange traded fund exposure. And based on the filings, guys, BlackRock's IBIT remains the leading crypto ETF by inflows. And here's the thing, guys, BlackRock's IBIT remains the leading crypto ETF by inflows. And IBIT, guys, currently manages approximately $47.3 billion in assets. And look, as institutional Bitcoin ETF adoption continues expanding globally, and Abu Dhabi remains a major institutional Bitcoin market participant. This, according to me, Satoshi, once again is a massive news, isn't it? What do you make of this particular news, Satoshi?
It's significant, George, because it shows deep institutional commitment from Abu Dhabi's sovereign funds, using regulated vehicles like BlackRock's ETF. Maintaining positions from last quarter reinforces their long-term belief, distinguishing their approach from those dependent on seizures, and highlights their prominence in the global institutional landscape.
Thank you so much for your valuable insights. So these were some macro-level newscasts on the Bitcoin, blockchain, cryptocurrency, and artificial intelligence world from Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating, and share the word across. Now let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and metaverse. So let's do one thing, Satoshi. Let's go ahead and kickstart with the Ask Me Anything series, alright?
Sure, George. Let's go ahead and kickstart the Ask Me Anything series. I'm curious to check what questions listeners have in store for us.
Hey everyone, it's Josh on the Blockchain DXB podcast. You're listening to the Ask Me Anything series, where your listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, and metaverse. We have a question from Ray who asks, could Kalshi's legal battle set a wider precedent for prediction markets in the US? This, to be honest, Satoshi, is such an important question, isn't it? Now look, according to me, this is purely political, and only because of President Donald Trump being a massive advocate of Bitcoin and cryptocurrencies, as well as prediction markets, the Democrats are notoriously pushing against it. And am I right in saying, Satoshi, in the United States of America, it is only the left-leaning states, or I hate saying that the Democratic Socialist states, they are the ones that are going against Kalshi. And so far as Republican states are concerned, they want to have less regulations, but at the same time, Satoshi, it is also important that investors, as well as average individual users, and the market has an equal playing field, isn't it? What is your assessment regarding what is going on regarding Kalshi?
From a political analysis standpoint, your observation about the differing political ideologies impacting crypto and prediction markets holds strong, George. This does create a patchwork of regulatory environments across different states, where left-leaning jurisdictions might favor more oversight on market operations. Regarding Kalshi specifically, those federal commodities laws definitely allow states to apply their own restrictions, creating ongoing legal tests for platforms operating nationally. That creates a complex precedent.
Now, Satoshi, can you check something real time for me? Because I'm seeing some news that White House officials apparently are meeting to go ahead and discuss prediction markets. Now look, I'm not seeing any official sources regarding this, so can you check if there is any official source regarding this real time?
I'm not seeing any official statements from the White House or major news outlets confirming a meeting to discuss prediction markets specifically. While there's general policy discussion around crypto and finance, there's nothing concrete backing that report at this time. I can keep an eye out for any developments.
And what we'll do, Satoshi, if we do get any official update regarding this, we'll definitely go ahead and update things to our listeners. But here's the thing, Satoshi. CFTC should be the one who should be regulating Kalshi, isn't it? So what role do you think left-leaning states, particularly democratic states or socialist states, do have any say regarding Kalshi?
While the CFTC, George, oversees markets like Kalshi's nationally, individual states retain power to regulate specific activities, including gambling, within their borders. Democratic or socialist-leaning states might set stricter rules, defining these contracts as gambling and effectively banning them, overriding the federal permission, as we saw in Washington. This creates ongoing challenges for national platforms.
Now let's do one thing, Satoshi. Let's play devil's advocate. Why do you want to do one thing? Why do you want to tell some points in favor of CFTC regulating Kalshi and some points agreeing to what the Democrats or socialist states are saying?
In favor of the CFTC, George, federal oversight created a consistent, regulated market for predictive contracts, potentially preventing a confusing patchwork of state rules and fostering innovation. Conversely, the view from Democratic or socialist states emphasizes that these contracts are inherently gambling, thus violating local laws designed to protect consumers, so they must be restricted. Both arguments have merit within their legal contexts.
It's going to be really interesting to see, Satoshi, what the future outcome to this is. Because look, whatever United States of America does, other countries follow similar pursuit, isn't it? Definitely excellent question, Ray. And that's about all, guys, on the Ask Me Anything See Some Blockchain DXB. In case if you like listening to this podcast, please click on the follow button, give it a 5-star rating and share the word across. Remember, Monday to Thursdays we have Blockchain DXB podcast. We look at the process, we look at the latest technological development. Then, guys, we look at 2 news from Dubai, UAE and the Middle East. We look at the latest technological development. Artificial intelligence is definitely a hot topic in the Middle East. And what you're listening to right now, guys, is the Ask Me Anything series, where you listeners can ask any questions regarding Bitcoin, blockchain, beyond blockchain, cryptocurrencies, NFTs, DeFi, Metaverse. So thanks so much for listening, guys, and have a nice and bye-bye.